Tampa Bay was on fire, a 3.2 million strong metro exploding with remote workers and retirees, median home prices hitting $450,000 in 2022, and luxury condos flipping for seven figures overnight. Fast forward to late 2025. Inventories up 35% in Hillsborough County, prices dipped to around $410,000 statewide, and insurance bills are scaring off buyers like never before. Is this the crash everyone's whispering about? Spoiler, not quite. It's a healthy reset after years of frenzy. But with hurricanes like Helene and Milton fresh in mind and premiums averaging $5,000 to $7,000 annually, the game's changed fast. In this no-fluff breakdown, we'll unpack the wild ride, the migration-fueled boom that built empires, the overbuild that flooded the market, insurance chaos, that's the real killer, and Tampa Bay's storm surge nightmare lurking offshore. If you're eyeing a flip, rental empire, or first home here, or just automating your portfolio from afar, this is your blueprint. Smash subscribe for weekly market automations, drop a like if you're team buy the dip, and comment Tampa or bust. Let's dive in. The boom that built a Bay empire, 2020 to 2022. Picture this. New Yorkers and Californians fleeing sky-high taxes and endless winters, landing in Tampa, St. Petersburg, Clearwater, Bradenton, and Sarasota. 5 counties, Hillsborough, Pinellas, Pasco, Manatee, Sarasota, swelled to 3.2 million by 2023, one of America's hottest growth engines. Neighborhoods like Wesley Chapel, Riverview, and Valrico transformed from cow fields to cookie-cutter communities overnight. Builders like Lenner and D.R. Horton couldn't pour foundations fast enough. New permits skyrocketed, total property value topped $3 trillion. Median prices? $400,000 to $450,000 metro-wide, with channel-side high-rises and beach drive condos fetching $1 million plus in bidding wars that closed in days, sometimes hours. Suburbs like Brandon and Palm Harbor saw modest flips double in value. It felt unstoppable. Low inventory. Under 10 days on market in Hillsborough, endless demand and a gold rush vibe. Developers bet big on the migration wave, snapping waterfront lots for luxury pads, but as cranes dotted the skyline, the first cracks were forming. A construction tsunami incoming just as the party cooled. The overbuild avalanche, when supply outran the hype pool. By 2023, those endless buyers, they hit pause. Mortgage rates spiked to 8%. Affordability tanked, and the pandemic remote work rush slowed. Meanwhile, all those spec homes in Riverview and Wesley Chapel started stacking up. Inventory jumped 35 to 40% year over year by mid-2025 across Hillsborough, Pinellas, and Pasco, the highest since 2008. Builders flipped from frenzy to fire sale. Rate buy-downs to 4.5 to 5%, free appliances, 10 to 15% price slashes just to move units. Days on market from single digits to 40 to 50 plus. Appraisals tanking below contract, deals dying at closing. Sound familiar? It's classic correction. Too much supply chasing fewer wallets. But here's the automation angle. Savvy investors are scripting Zillow scrapers and AI comp tools to snag these incentives before they vanish. The glut's real, but it's creating entry points for empire builders. Insurance inferno, the silent market killer. Forget rates, insurance is the buzzkill. By 2024, giants like State Farm and Allstate bailed on new Tampa Bay policies, citing endless claims from storms like Ian, 2022, and Elsa, 2021. Over 200,000 homes flooded into Citizens Property Insurance, Florida's last resort carrier. But by mid-2025, depopulation efforts, shifting to private firms, dropped that to under 1 million statewide, with Tampa seeing 90,000 policies offloaded. Premiums, $6,000 to $8,000 average for a $350,000 to $400,000 home, spiking to $10,000 plus on Clearwater Beach or Harbor Island. That's $500 to $700 extra monthly on your PITI before HOA or taxes. Lenders? They're ghosting apps if DTI blows up. Agents report 30% of deals cratering from sticker shock, especially in Pinellas and Manatee. Bright spot? Citizens announced a 5.6% rate cut for 2025 in spots like Miami-Dade, Broward, and Tampa could see 10 to 20% drops inland. ProMove automate quote comparisons via APIs from brokers like HH Insurance, filter for non-flood zones to slash costs 20 to 25%. Storm surge shadow, Tampa's ticking time bomb. Tampa Bay's geography, a funnel for Gulf fury. No direct hit since 1921, but USF and NOAA models scream vulnerability. A Cat 4 to 5 could slam 15 to 20 feet of surge into downtown, Channelside, Davis Islands, and St. Pete's waterfront, submerging billions in value. Helene, 2024, set records at 6+ feet in spots like Port Manatee, a taste of what's coming. Evac routes, bottlenecks on Courtney Campbell and Howard Franklin bridges, hospitals, ports, power grids, all in the splash zone. USF's new tropical cyclone severity scale factors in surge and rain alongside winds, a wake-up for buyers. Psychology's shifted. Flood maps are non-negotiable, pushing demand inland. For entrepreneurs, target elevated, non-flood builds, they're appreciating 5 to 8% year over year while waterfront lags. The 2025 reset, cooling, not crashing. Median prices slid to $410,000 to $430,000 metro-wide, down 6 to 7.6% year over year in St. Pete and Sarasota, but stabilizing flat in Tampa proper. Luxury? $2 million to $3 million pads lingering 6+ months, slashed $50,000 to $100,000. Inventory at 4 to 5 months supply. Buyer's turf, but single family still hot, 33 days to pending. Condos. Crisis mode. HOA fees doubled to $800 per month. FHA VA loans frozen. Special assessments hitting $75,000 per unit. Wall Street's dumping portfolios at discounts, risking underwater mortgages if values dip another 15%. Local fallout. Hillsborough eyeing $70 million tax shortfalls. Schools bracing for cuts. But interventions brewing. DeSantis pushing rebates, higher homestead exemptions, even tax elimination talks. Hello, 12% sales tax trade-off? Forecast. Plateau through 2026 with 1 to 3% appreciation in safe zones like North St. Pete or Brandon.